Welcome to the Crypto Prism channel. Let's take a look at the latest price action of Bitcoin. In yesterday's video, I mentioned that price was sitting at the 0.236 level. And I clearly pointed out that as long as 0.236 held, price would naturally move up to test 0.382. And as we can see, this minor rebound did indeed reach 0.382 and then faced resistance and pulled back, perfectly validating the previous outlook dot from the 1-hour chart. The key anchor of this move remains 0.236. The prior logic is now fully played out after stabilizing above 0.236. Price naturally moved up to test 0.382 around the 90,500 area, and then clearly pulled back from that zone. This shows that 0.382 is still an effective short-term supply and trapped position zone. Once price rebounds to this area, selling pressure and bearish defense emerge. Now, price is returned to around 0.236 again. What the chart is telling us is that the bulls have not completely collapsed, but after being suppressed at 0.382, momentum is shifted into a retest phase. The rising channel looks more like a corrective rebound channel after a decline. Repeated consolidation near the midline of the channel means the market is using time to exchange for space to digest selling pressure. From the 1-hour chart, 0.236 key support has now been broken, and the previous rebound repair has completely weakened. The lower boundary of the rising channel has also been breached. Next, focus on the supports below. First, watch the 88,000 round number level. This is the first support zone. If price stabilizes here, there may be a minor weak rebound, but it will likely struggle to reclaim 0.236. If 88,000 fails to hold, then look to 87,000. The core level is the previous low at 86,020, only if price stabilizes there. Can a new rebound potentially begin if 86,020 is broken again? The market will likely extend deeper to the downside. Overall, the structure is in weak decline. Do not guess direction. Wait for stabilization signals at support dot without confirmation. Remain bearish. Now let's move to the 3-hour time frame. On the 3-hour chart, the structure is very clear. The broader structure remains under a descending trend line, extending down from the high near 97,900. Under this pressure, price formed a temporary low near 86,000 and staged a rebound. However, the upside of this rebound was clearly capped by this descending trend line. Each time price approached the trend line, it began to pull back. This shows it is not just a technical level, but an active bearish defense zone, combined with trapped positions from earlier levels. I previously pointed out this descending trend line as well. The current rebound looks more like a technical retracement within a downtrend, not a trend reversal. On the 3-hour structure, highs continue to move lower, and the rebound lacks sustainability. Price has returned to around 87,000, showing that bulls have not gained sustained control. Within this trend structure dot at the same time, the 3-hour candlestick patterns suggest a choppy but bearish rhythm. During the rebound from 86,000, price followed a push-pull-push pattern, but failed to make a new high, which is typical of heavy overhead supply and relatively weak underlying demand. The key dividing lines in this structure are two. Above is the descending trend line, and the confluence resistance zone around 90,000, where trendline pressure meets psychological resistance. As long as price cannot effectively break above and hold above the descending trend line, on the 3-hour chart, each rebound toward it is more likely to become a better entry point for bears. Below, watch the short-term support zone, around 88,000 to 88,500. A prior consolidation and volume cluster area dot. If this zone fails, price will likely return toward 87,000 to seek liquidity. In extreme scenarios, it may retest the previous low near 86,000. Therefore, the most professional approach on the 3-hour time frame is not to predict direction, but to wait for confirmation. On the 4-hour time frame, we are seeing a textbook move. Price broke below the ascending trend line and then performed a retest. This trend line had extended upward from the low near 80,600, acting as dynamic structural support. But once it was decisively broken to the downside, the market followed a standard pattern. First break down to create panic, trigger stop-loss cascades, then retest the former support to gauge strength. The feedback from the chart is clear dot after retesting the trend line. Price failed to sustain a rebound, and instead turned lower again. We can see consecutive bearish candles rejecting the level. This confirms that the trendline's role has shifted from support to resistance. This support turned resistance has now been clearly confirmed on the 4-hour chart. More importantly, a failed retest often means that bulls who were positioned along the trendline were forced to reduce or stop out after the breakdown. When price retraces, they're more likely to sell at break-even, creating supply near the trendline dot. Meanwhile, bears treat the retest as a higher probability defensive zone. If the rebound lacks strength, with more upper wicks or unstable closes, bearish positioning will increase and push price lower again. In other words, on the 4-hour time frame, Bitcoin is broken both the key ascending trend line and the 0.236 support. The prior rebound repair has fully weakened, and bears have officially taken control. The 88,880 level above has now turned into strong resistance. Rebounds into this zone are highly likely to face rejection. Below, first watch 88,000 as short-term support, then 87,000, with the core support at the previous low near 86,093. From an operational perspective, selling into rebounds is safer. If price rebounds toward 88,880 and faces rejection, that could be a short setup. Targets would be 88,087, bottom fishing should wait for stabilization signals near 86,093. Otherwise, remain bearish. And always use proper stop loss control. That's all for today's video. See you tomorrow.